Be bashful. Now it can be a normal clubhouse room. Be sure to follow my club for real rooms that are no BS financial rooms. I'm not the best at, running a clubhouse room, but it's a lot of fun. So if you have a question, chime in. I get people too, they remember going into one Bitcoin room and there was a woman who said basically she bought 65,000 at the top with her only money. She bought, I don't know, I want to say she was worth like 400 grand. She put 400,000 into Bitcoin in November of 2021 at 65,000 because she was pumped up with enthusiasm by the Pump It Up song. Got to pump it up. Let's get that song going. We need that song back. But she was listening to the Pump It Up song and she was listening to Bitcoin Tina and getting all pumped. And you know what? I'm a long-term Bitcoiner. I believe in it. I believe in liberty. I believe in money, divorce from state. But it's a long-term project. It's not like one day we're going to wake up and the dollar is going to be worthless and Bitcoin's going to be $1 million. What's going to happen is, like most things in society, progress takes time. And before Bitcoin was respectable, you had massive cycles. You had, violent volatility. I think that Bitcoin's down what it is and it's not down 90% is actually a case long term for Bitcoin, that it didn't go down 90% in this cycle. But it's not about price to me. It's about technology. It's about, when I acquire long-term positions, whether it's in Berkshire Hathaway or Bitcoin, I'm not an all or nothing guy. I have life insurance, so if I die, my wife's okay. I have trusts. I've heard people say, oh, trusts are idiotic. Well, you know what? You work so hard to save money. Why do you want your wife's future ex-spouse to inherit all of your money that you worked hard for? So I have a Q-tip, not the thing with the cotton swab at the end for ear, but a Q-tip. And my wife likes it too, because if she passes before I do and I happen to remarry, can't even imagine that. And that woman, wants to steal all of our money that we worked hard. No, she's not going to get our kids' money. She has to stay for the love. So that's beautiful. And even our kids, the way we set it up, they don't get access to the family trust until their spouse signs a prenup. They don't get money in the family trust because I earned it. It's like when Obama said, you didn't build that? Idiot. Moron. I built it. I went from and by the grace of God, by the way. But I built it along with the grace of God. And you know what? I don't want some future spouse of my kid find out X and they divorce my daughter and they get half of my hard-earned savings. Not going to happen. That's why trusts are important. That's why financial planners are most of them are idiots. They talk about mutual funds and risk tolerance. And I always thought that was dumb because everybody's the same risk tolerance. They don't want to lose money. They want to make as much as they can. Now, we do that to a degree, and that you want to make sure the risk you're taking is appropriate for the client. But there are basic financial principles like trusts and estate planning, insurance. Do you have disability insurance? If you die, is your family okay? If you get disabled, are you going to get a check every month? I don't need disability insurance, but I have it. You know why? I want to get a check every month for the rest of my life if I get disabled. I have no need for it. I'm doing okay. But I want it. And that's the other thing. People talk about needs-based financial planning. I don't know about you. I don't want to live my life based on need. I want to live my life based on want. So if your advisor talks about need-based planning, fire them. Because they're an idiot. So let's go to the questions. Somebody said, Obama meant you alone didn't build that. No need to twist his words. Okay, we have an Obama apologist. No, he meant that it is a community good. He knew exactly what he meant because Elizabeth Warren and others have talked about it, that your 401k is a community asset, meaning you didn't build it without the help of the government giving you that tax break. So you know what? The government is entitled to a greater share of your labor. So, but this guy also says, I own all my properties in trust. Well, very smart guy. But Obama was a centrist, not a lefty. We'll tell you, he's a lot better than the current occupant. And I would say he was left center. I think he governed, his tax policy was centrist. But on certain verbiage, I think Biden is able to get away with stuff that maybe Obama wanted to do because the party has moved further left. Are the I bonds at risk of being defaulted on? No. And is it true that she'll get 1% even if the market goes negative? No, she'll get 9% for 6 months, which means 4.5%. This is on that I bond thing. But this is what people are striving for. It's like you're picking up pennies. Your mother, poor mother, she's picking up pennies and getting steamrolled by a steamroller in the market. So the I-bond is a great thing. You go to treasurydirect.gov. It's free. This is a freebie. Not giving any investment advice. Get 10 grand. You're guaranteed 9% for 6 months, which really means you're guaranteed about 4.5%. Now, after a year, they could drop you to zero if we have no inflation. And personally, at the way this market looks, we're not going to have inflation next year because the market's going to be so depressed, prices are going to have to be lower. So we got Rami, who's a question. Somebody bring Rami up on stage, and if somebody wants to help co-mod to bring up some of these questioners, go ahead, Rami.
I'm just kind of curious about what would happen to the trust that you put your children if they got married and their partner didn't want to sign the prenup and your children also is okay with it, and
then the child has zero access to the money.
Have you thought about it? What would that money happen to what would you do with that money? You just
disperse it to the other kids equally. My kids are going to do it because they're not dumb. Because here's the thing. Let's say we have the internet, right? You can look up, okay, this particular guy was a private equity. This person managed this amount of money. So you could have some gigolo come in and try to sweep my daughters off their feet. It would just get distributed to the other 6 kids. How many kids you have? Now, here's the thing. If that kid loves my daughter, they're going to be a recipient of the income from the trust. So it's just they don't have claim to the trust in a divorce. And it's divorce proof, creditor proof, all those. But if my daughter needs help paying the mortgage, she has authority to take money out for her health, education, maintenance, and support. But my kids are protected. So does that help you, Rami? And this is a great room. We could go to the whole discussion of trusts. I'm going to be doing a room tomorrow. Am I live tomorrow? 2 to 4. We have some really powerful speakers. Ken Grobach, who am I having tomorrow? We're having some really cool people. I'll have to look them up. And then who do we have with another question? Rami, do you have a follow-up question? Anybody else have a question? Be sure to chime in with your questions on All Matters Financial. Ken Gronbach on demographics. Interesting thing on demographics pointed out by... This is a major problem because we got the morning after pill or the day after pill, less people having children. You know, the average The average household doesn't have 7 kids like mine. The average household is what? 2 kids maybe? Would you say? 1.5? 1.7. So we're not replicating. We have a massive problem in America because we're not having enough kids anymore. That's going to cause the tax base to shrink. So we're going to be talking to Ken Gronbach on demographics and also the market crash, and Martin Ford at 3 p.m. on AI and the economy. That'll be really cool. And then I'll be talking about all things financial. It'll be really cool. So can we go? Are we live on YouTube? No, we're not live on YouTube. We'll be live tomorrow, and I'll do some technical analysis. I'll give some light TA today too, because I know people like that sort of thing. Will C says, is not now the best time to take a portion of your traditional IRA and do a backdoor Roth with it? Yeah, you betcha. Market's depressed. Great time to do a backdoor Roth. But hey, if the market's going to crash further, it'll be an even greater time. So, I mean, you're really trying to time, which is nearly impossible. If I was a betting man, I think September, October is when we reach peak fear, but we may be there very soon if the market keeps plunging every single day. It's also a great time to own stocks in a 401k. We are live on YouTube. My 2 passionate assistants did not notice that one. So I'm going to do some technical analysis. But first, somebody says, what's a backdoor Roth? What's a backdoor Roth? You know, you're supposed to do that screen when I look off to the side. Ben, we got Ben, the intern, where I go to the switchboard. We usually have Jim, but if not, that's fine. I am going to go to some technical analysis. Don't show my screen yet. We're going to show my screen in a few minutes. But basically, a backdoor Roth is when you can contribute $6K if you're 49 and under, $7K if you're 15 older, regardless of your income. So even if you make too much money to do a Roth IRA, you can do a backdoor Roth IRA, and then you convert it to a Roth, and then that money grows tax-free for life. Excellent way to hodl stocks, Bitcoin, etc. Just make sure you're not hodling shitcoins. So next up, I want to show you some interesting TA done by our chief market strategist. You know, nobody knows. Don't share my screen yet. I got people stuff up on my screen. So you can share my face. Just says Josh Jalinski. We don't have the normal guy who shows. I thought you knew this stuff, Ben. Ben's an intern. So now you can share my screen. And okay, I have to do everything apparently. Because okay, here we go. So if you want to look on my YouTube right now, hit the subscribe button. It's very powerful. And Clancy, turn off my video in studio. But if you look, the S&P broke the 50 moving average, 50-week moving average, 200-week moving average back in April. We then have the 200-week moving average, which is 3502 on the S&P. That would probably be mass capitulation right now and be a great buying opportunity for a short-term rally, but those could be the famous last words. The last time we went below the 200-week, not 200-day, 200-week moving average was the COVID crash. We fell much lower. If that occurs by a similar diagonal, we could be at around 3,000 on the SPX. I think by late summer, early fall. But at the rate of the total hell that I'm seeing, I'm not inducing fear. I'm just saying people are just irrational. They've not been through a bear market, the likes of this one, and they're just, they're just really unnerved by this. So go to my YouTube right now and watch what happens to this crash. Go to Josh Jalinski, the financial quarterback, hit subscribe. You can see this beautiful chart we created. 50-week moving average, 200-week moving average, 15-week moving average. What is an interesting moving average is if the market falls below the 15-week, it's usually a good time to get out of the market. But, hindsight's 2020. So for those wondering, when's the time to get back in? By the way, if you sold at the 15-week, you would have missed the COVID crash, but you would have missed the easiest part of that COVID rally. But so that's a little technical analysis. Well, C says every time is different. Every time is different, but things rhyme. If you look at the 7-year cycle tops, 2000, 07, 15, 2022, January 2022, it's different a little bit each time, but 7-year cycle tops tend to have a similar movement. Also, every 2 years, we tend to have a massive 20% sell-off the last few years. December 2018, March 2020, maybe June 2022, the Powell pivot take two. I think we're going to have a Powell pivot. But I don't know if it'll be too little too late because the market already crashed. Let's go to the questions. If you have a question, come on in. Would love to talk to you. If you have questions on stocks, bonds, annuities, mutual funds, whatever question you have, no question is a dumb one except the one that you do not ask. So get to ask any question if you're up on stage, or if you just have a question on anything. Could be structure, Bitcoin trust, Roths for Bitcoin right now. Do it back to a Roth conversion while you're down. If you're a long-term hodler, back to a Roth, a great tool. Trusts are a great tool. Why? I firmly believe that with chain analysis, government's going to be able to figure out who owns what, where. They'll be able to figure out who bought it on Coinbase, who bought it on this exchange, Gemini, whatever it might be. And pretty soon, they'll know, chain analysis on everybody when they want to, because they're going to be so bloodthirsty for money. The government's going to be so broke. They're going to claw back PPP money that was taken ill-advised by Kanye and others. Just wait. We have not seen true pain. You think this is pain? We haven't seen nothing yet. So I'm not a perma bear because I think usually the future is brighter than the present, meaning that in every one of these crashes, people tend to freak out, and then they should be good buying opportunities. But, I don't see us done with this level of pain. So if you have a question on your money, it could be trusts, could be estate planning, could be the economy. Now is the time to chime in. Little trust work. Now, the beauty of owning things in a trust is if you have a dynasty trust, you could get 365 years of estate tax-free growth. And if you, like I believe, certain assets are going to appreciate dramatically. Think about Berkshire Hathaway, 500,000 a share. Think about what Bitcoin could be in 10 years, maybe 500,000 a share. Nobody knows. But wouldn't you want to own that in a Roth where it's tax-free? Wouldn't you want to own that in a trust to where all that growth is estate tax-free and you can have control from the grave or from heaven? because, I built it with Obama's help. So let's go to the questioners. If you have a question, if you want to learn about the market, whatever question you have, no question is a dumb one except the one that you do not ask. So, Kelly, do you want to talk? Come over here. Do you have any comments? Go ahead.
I actually have a question.
Sure, go ahead.
So for those that have 401ks that don't have the option to invest in GBTC, what would you suggest as far as other options putting their money into?
Well, we don't give any investment advice, but based on your age, you got to look at how old you are. It's not polite to ask a woman their age, but age is a big factor. How many years are you going to need that money? So my 401k, because I got time till I have to take it out, I could have 32 years of tax-free growth. I just have it fully in the market. I'm hodling forever. That's my theory on my 401k. My other assets outside of my 401k, I'm very defensively positioned right now. I have fixed assets. I have cash value insurance. I have real estate. I have Bitcoin. There's certain assets you can't have Bitcoin in. GBDC, for example, is really great to hold within a Roth IRA structure or a traditional IRA structure. Most people's assets are in an IRA or in a Roth. And I think although Fidelity is working on, one of the things we could do with Fidelity is own real Bitcoin within a brokerage account structure. Not a lot of people have that option. And we could work with your employer on a 401k to allow that as an investment option. We work with a large pension provider and actuaries to where we're at the forefront of making that happen with plan design. If that's something that, if you or anybody's an employer and they want to do that, just message me and we could talk. What other questions you have on that? But if you're near retire, how old are you? You look young, unless you're not.
I'm 34, but my 401 doesn't have the option for me to put it into GBTC. So I was just wondering. I mean, they have Vanguard and other stuff, but I was just kind of asking like what other suggestions I could, as far as
Well,
categories where I could have my 401k exposure to.
one, I would talk to your HR person and figure out who is in control of what's called an RFP for your company, like a request for proposal. And hey, I'd be happy to tell them on why they should want to have it as an asset class exposure in a 401k. And many people are not aware of that. Other things that you should look at in a 401k is a fixed account. We have fixed accounts in 401ks that are like 3% right now. So let's say you're like, man, I don't want to lose all my money if the account goes, if we really have a true bear market. 20% drop is not a real 2002 style crash. It's not a 2007 to 2009 style crash. It could be real pain in the market. So you got to be careful. So I'm going to show you all what happened to the NASDAQ in 2000 to 2002. I think this crash is going to be more reminiscent of the NASDAQ crash because things were so overvalued. Things bounced back quicker in the '08 crash. But if you just look at the NASDAQ chart and we go to the max chart, everybody see this on YouTube? If you go to the 1 year chart, doesn't look good. I don't know. It must be, I don't know. The Edge browser kind of sucks compared to Chrome. But if you look here at, if you look, it's funny. It looks like a blip in time, I'll have to break out the chart, but basically certain stocks were down like 90%. And you really see that today more than most. For some reason, when you do Yahoo Finance on the Edge browser, it sucks. So, I don't know why it doesn't do charting as fun. I like going to Yahoo Finance for charts for regular people. We're not into that. But what I would recommend with the 401k is, if you're conservative, look at a fixed option for maybe 40%. I don't mean bonds. I mean a fixed option. So we work with various vendors like Fidelity, Nationwide, Emeritus. We shop it out. One of the things we when we do RFPs is for companies, large companies, we'll look at, well, who has a better fixed rate? Because, certain companies, they don't give fixed rates. So in the fiduciary world that we live in, I think fixed rates are appropriate for a portion of one's nest egg. So here's my Chrome browser. Can you blow that up? It's a little small. So if we go to the date range from January 1, 2000 to, 11/1/22, market plunged. If you see how high it was, really peaked out from 2000. The NASDAQ did not recover for like 15 years. And if you can tell, it went to 1100. The low was September 30th, 2002. So, Ben, I don't know if you want to type in the YouTube, see if we got any questions in YouTube. But that's a 71% crash from January of 2000, and from the peak, which is March 6th, 2000, we see a crash of almost 75%. Now you may say that cannot happen. If you look at the same chart and we look at KWeb, which, in the interest of full disclosure, we own for some clients. If you look, there's actually surprising value in Chinese tech. Chinese tech at a similar run, 102, down to, one day it was like 18, and then it bounced, closed the day at 24. But I don't know what that is as a percentage, but it's at least 70+%. So maybe that's how low these things go. There's an old adage, like if Apple goes down 40, that's usually when a bull market ends. I mean, all these things, every time it's different. But it's generally when the bulls start saying, we're going to buy more, because things are directed. Now, somebody says, do you have a fiduciary service independent of your management service? Yes. Well, we manage on a fiduciary basis. So I own a company called Wealth Quarterback, LLC. We're a registered investment advisor, registered with the SEC. Registration does not imply endorsement, but it's one good thing. It means you have over a certain amount under management. So that's like, lowest common denominator. If you're dealing with somebody who's going to put your best interest first. So a fiduciary comes from the Latin fide, which, what fide means, Ben, the intern? So it's like faith, acting faithful, acting in good faith. It's like semper fidelis, always faithful to your client. So, Yeah, some idiot is posting crap about trading on her Clubhouse chat. Yeah, you can push them down to the audience if they're promoting shit coins or shilling. Good thing about all this is I hope this will be the end of altcoins and shit coins and things made on fraud by private equity and things like that. Because I think a lot of people are being scammed. You know where I also think people are being scammed? By real estate gurus. Ballers. I saw some dude on Instagram flashing, bragging that he spent $50,000 on a private jet. I bet I have more money on one trip for private jet. Bet I have more money than that guy. Why is he on a private jet? He's trying to lure you to pay him 10 grand so you can be like him. So Ben, you're an intern. You need to pay me 10 grand so I could show you to be like me. Or 50 grand. You want to do that? Now people pay 50 grand a year to go to law school, so I guess that's the concept. I'd be happy to mentor people, but we got to melt the fat, not off of just shitcoins, but also real estate shilling people, because a lot of people are being fed into funds and into influencers and private REITs because they're dumb. I mean, Ben and I talk about this. Ben is how old? 21? 20. And he's like, Josh, on Instagram, you got to be a little flashier. You got to show your, whatever, show your Rolex and show this. I don't have a Rolex. I'm too cheap. But, and then there's somebody called the Tinder Swindler. No, this guy wasn't the Tinder Swindler. I know who this guy is. And he was a coach. Here's the thing. Most people who are successful will give you some advice to be financially successful. And it's generally you work about 80 hours a week. And that's the generally the success. And then you become a sought after expert in your field. And then people will pay you because you know what you're talking about. People will not pay you if you're a moron. People will not pay you if you don't know anything. And it takes time. So, what other questions you have, folks? I will keep the room running. If you have more questions, if you want to see a little TA, here's some hope. Does anybody want hope? Type it in the chat box. Say, I want hope. I'll give you some hopeful charts. I have some hope. And some interesting things. Make sure you follow my club, The Financial Quarterback. We're going to live 3 hours tomorrow. 2 p.m. Are we 2 p.m. or 1 p.m. Eastern time tomorrow? 2 p.m. Eastern. If I start at 1:30, I might. I'm going to be doing more TA. So check this out. So this chart is K-Web. Now, what's interesting, why do I care? Well, think about how bad China's been, right? China has gone nothing but down. But you notice it fell really low around March 7th and has bottomed and is now trending up, which is kind of cool. Maybe that's how far our tech will go. So maybe that's a good sign. If you notice, things went to hell here, and then they just kind of stayed lower and have really not gone any lower. So maybe China tech portends what's going to happen to our market. Bros, it went down 90%. Not 90, like 75. So I think tech, if you look at Kathy Wood, her slogan should be "Got Wood." That would be her slogan. But Kathy Wood, smart woman, impressive. And if you look at her fund, has gone nothing but down, but it was holding up until the 13th. And then it bottomed and now is showing resilience. So I wonder if the tech that has gotten so sold, you look at Kathy Wood's ARK G Fund down 54% for the year, up in after hours trading. So maybe that's a good sign. If you look at ARK K, plummeted 36, really lower than the COVID low. So maybe there's a lot of value. Negative 57% year-to-date total return. So to answer, KC's question about 401k. By the way, we can help people with their 401ks. Just DM me, help my 401k, and we'll give you a free 45-minute 401k review. But look at RK plummets. Is it bottoming? Are we at March 2020 bottoms? Perhaps. Now, here's what also makes me look good. A lot of these, the Coinbases, Bitcoin, all the high-flying stuff, the charts kind of look similar. If you look at BTC, chart on BTC is just plain ugly. But actually, some people say that's bad, but I actually think it's good because it's kind of trading like the S&P, which means it's way more expected. We have still not breached the June 15th low. I don't know if this is low in the close when it was 23, but pretty low. And does anybody know, when does Saylor, I'm not an expert at this, when does Michael Saylor have to sell his Bitcoin? Does anybody know that? That will be the epic buying opportunity. Does anybody know?
Yeah, I do. The only thing that he's at risk on is the Silvergate loan. Everything else is like 2028 or later. And the Silvergate loan, he can recollateralize down to like 3,500.
Yeah, but you don't think they're going to be calling that money quick? But, and what is the price level that they have to call that loan on?
The Silvergate loan, he said he can recollateralize it down to 3,500. I don't really know what the callback restrictions are on it.
So yeah, so maybe he won't sell. Well, that'd be a good thing for Bitcoin, but could be a good buying opportunity too. I just don't think. You mean to tell me his shareholders are going to be suing him for breach of fiduciary duty? June 14th just came out. CEO says no margin call on Bitcoin loan. Told them not to worry. But didn't the guy from Enron tell people not to worry? This is the problem with hero worship in any field, because you mean to tell me his board doesn't start suing him for breach of fiduciary duty? I don't know. I mean, I hope for his sake and, Bitcoin's sake, but it's not good to have, one guy control so much where, I mean, if word gets out, somebody says 3,000, well, then that's a good sign. Well, that's hope. Will says, this isn't the first time that Seller has almost lost his ass. He's a vet. So the point that, my broader point with Bitcoin is not about the price. It's about the technology. It's about money being divorced from state. That's what I care about. Funny thing is, I don't care about the price as much. So somebody says, do you think the BOJ will raise the yield curve control cap on JGBs from 25 bips to 50 bips? Time to go long USDJ. I don't know. You would know that more. Joe, do you want to come up and comment on that? I don't know. Didn't the ECB, I don't think they're going to raise rates. I don't know why we're raising rates, frankly. Into a recession. It's a very dumb move. But I think he's telegraphing that they don't. I think Powell was telegraphing. So I'm not as into what's going on with the Japanese yen. There are bigger whales. Bitcoin needs no leader. I agree with that, guys. But, you know, when the media props things, dumb people sell because of a media narrative. Just like with Dogecoin popped because Elon embraced it. So, media narratives, but MicroStrategy is debunking the margin call rumors, Bloomberg.com, Bitcoin.com. 4 hours ago, crypto briefing. Celsius invested by regulators, bunch of Celsius idiots. Aren't rates being raised to offset inflation? I don't believe we're really having true inflation. Although it appears we are, but it's not. I believe it's still COVID induced. We're going to be in a recession soon. We're going to have deflation. You really think, is anybody in this room buying a house right now? Or are you waiting? I'd like to hear from somebody. Are you buying a house right now? I'd like to hear you, Joe. Joe, do you want to come up stage and talk about the Japanese yen? And it's more expensive for banks to borrow money. Yeah, but banks aren't lending money. That's the thing Jeff Snyder has brought up. So I think this is going to be a very bad recession, but, you know, we shall see. Somebody said around 3,900. I think the Japanese keep the yield at 25 bips, but I have no clue. I think, you know, there's smart people. You know, for some reason, the Fed wants to have everybody believe in their power. But I'm not that. That's not my area of expertise. So, anybody have a question or comment? Somebody says, yes, I believe we are eventually headed towards deflation. I agree with that. Rates are being raised to offset inflation. They're being raised because the Fed is like the Wizard of Oz, and the curtain has not been pulled back yet. But we shall see. 30 minutes ago, by the way, we have a great CCO who like gives me news up to date. Coin culture. Sailor assures that MicroStrategy will hodl through adversity. Well, that's very good.
Hey, Josh, can I ask you a question?
Yeah, go ahead.
What do you make of commodities? You know, do you think they have legs? Is this a short-term trend, or do you think they'll, be a period of rebuilding and everything where commodities will last for, 5+ years or so?
I think as a part of a diversification play to have 10% in commodities, fine. I think I think every commodity is different, but I personally am not that bullish on commodities. I think they came up so much due to Russia, Ukraine, and some of the, which commodities in particular? I mean, lumber is down 50%. Copper, I think everything's its own cycle.
Yeah, I would be more curious about it, basket of metals and oil.
I kind of lumber's down to almost mid-COVID, pre-COVID levels. Wait, so what are you saying? Are you talking about like GCSI, like the index fund?
Maybe like
or gold?
There's an
miners.
oil exploration fund.
Yeah, I can't talk about specific. I could probably, but I can't talk specific funds. But there are commodity indexes like that. Let's look at a commodity index.
Yeah,
okay,
kind of in that neighborhood.
GSG down 5 days, 1 month. Woo! It looks way, ran up from like 16 to 25. It looks kind of frothy to me.
There's food too. RJA, for instance.
Yeah, I mean, everything's different. I think, it depends on You know what I like right now a lot? Property casualty insurance companies, because they're able to raise their price and make more money on higher interest rates. Oil's looking frothy, commodities are looking frothy, gold is kind of in a no man's land. Some people are pushing the miners. I haven't done a lot of mining work yet. I mean, really, everything kind of looks ugly right now, but except, guaranteed stuff. And gold miners, GDX, I'm not recommending anyone buy this. That's interesting how low it came from how high it was. Basically, I don't know. People don't make money using miners. It's like a speculative thing. They pop and then they go down. So, any other questions on that?
No, thanks for the insights, though.
I think commodities are going to start coming down because if you're in retail, you've ordered all your crap. If you're in construction, you've ordered all your lumber. You've already had your orders in, so they have their money. They haven't gotten shipped. Then let's say you're a builder on, I don't know, I'm just going to use Long Beach Island, New Jersey. Beautiful beach community. You're going to build your property. You're going to sell it for $2 million, $2.5 million, whatever it is. Then we're going to be in a recession. Nobody's going to want to buy that. So I think commodities are going to start coming down. That is actually a good sign that deflation's coming down, that lumber's coming down, that copper's coming down. When will the market pick that up and we rally? Maybe tomorrow. I don't know. I don't see that. What's everyone's take on buying into Google before it makes a split? Well, Google's a great long-term company with their algorithm. The interesting bullish case for Google has nothing to do with, you don't make anything more by a stock splitting. You just get, more shares and it's worth less. So the average fund might buy it, maybe added into the Dow. I mean, a $2,139 stock has very little room to run higher except lower. But the bullish case for Google is that it's underestimated on a one-year target basis, according to Yahoo. It's bearish on the basis that, frankly speaking, if we're in a bear market, 2,900, take 40% off of it, Google's probably going to hit 35% discounts before be a really good buy. But fundamentally, what's kind of interesting is Facebook is really struggling because of the iOS, Apple iPhone changes. Google, not so much. They're making a killing with Google Performance Max, basically because they spy on your emails, they spy on your search, they spy on everything. Facebook really can't spy on you like they used to, but in Google, you're using their ecosystem, so the ads are relevant. Where Facebook, the ads are not relevant. So somebody says, is that not true? So I was told that you should buy before, so in the long run you have more shares at a later date. It doesn't make any sense. It is what it is. The theory behind it lowering, right, is that you'll get more shares and then more average people will buy it because it'll be $200 a share. But with that logic, Berkshire Hathaway would have been a bad, stock to invest in because it never split off. Yeah, I think there's a lot of things that people say about the market that are just flat out wrong. We'll see, given a 5-year horizon. Will, are you up on stage? I want to talk to you about this. Would you rather buy $1 million in a Hawaiian property? Will, can you come up on stage? I want to talk to you about this. This is great. Or are you bashful? If you're bashful, just write bashful in the chat. I won't bring you up. But if you can, come up. So Will writes, given a 5-year time horizon, would you rather A, buy $1 million in Hawaiian property? By the way, I'm an expert in Hawaii property. Be careful if you're not Hawaiian, it may be difficult. A, buy a $1 million in a Hawaiian property. B, $1 million in a health insurer. I didn't talk about health insurer. They will not be immune to market crash like all of them will not be, but I like property casualty insurers. C, Google Alphabet. D, index funds. I would rather, that's like advice, so I can't give direct advice, but $1 million in a Hawaiian property, I'll tell you what, I've seen Hawaiian property. I have a place in Hawaii where I want to buy at the next crash. And I'm seeing prices being cut right now. So this one particular area is like the playground of the rich in Hawaii. And I love it. I know why it's the playground of the rich. It's like paradise. And I'm seeing prices drop a couple $100,000 here, a couple $100,000 there. And you could really see some good buys. But I would wait on Hawaii. I'd be more tactically positioned. And Crystal, to answer your fuller question about Google, if it's $2,000 a share and you get 10 for 1 split, it'd be worth $200 a share, but you'd get, 10 times more shares. Doesn't really, matter too much. Now, yeah, GC's coming. It's the only thing that changes the value of your position based on the price action. I mean, theoretically, it might do better because it might be composed in the Dow, so it gets more net buyers. So, okay, I want to thank you all for joining us. It was a blast. If you have any more questions, final questions, we are wrapping up the show. I want everybody to hit subscribe to Financial Quarterback. By the way, I can keep the room running. You guys just talk. And answer any questions. But I want to thank you all for joining us on YouTube. Hit subscribe to the Financial Quarterback, Josh Jalinski. Hit the green Monopoly house on top of my club. That way you can see my special market update tomorrow. We'll add in some technical analysis. Maybe I'll do some research on the Japanese yen. When we return, this is Josh Jalinski, the Financial Quarterback, signing off on YouTube. Clubhouse, you can stay in and just hang out and talk. Thanks all for joining us.